Did you know Bitcoin mining consumes more electricity annually than entire nations? This colossal energy demand powers a global network. It raises crucial questions about sustainability, especially for a developing economy like India. Imagine the energy cost. A single Bitcoin transaction can consume as much power as a household uses in several weeks. For context, this is equivalent to lighting up 100,000 homes in Mumbai for an entire day. Many estimates suggest the annual electricity bill for global Bitcoin mining could exceed 1 lakh crore. This staggering figure highlights the scale of this industry. But what exactly is Bitcoin mining, and why is it so power-hungry? At its core, Bitcoin mining is the process of creating new Bitcoins and validating transactions. Miners use powerful computers to solve complex mathematical puzzles. This verification process secures the entire Bitcoin network. When a miner successfully solves a puzzle, they get to add a new block of verified transactions to the blockchain. As a reward for their work, they receive newly minted Bitcoins. This is how new supply enters circulation. The puzzles are designed to be incredibly difficult and require immense computational power. This mechanism, called proof of work, prevents fraudulent transactions and secures the network from attacks. To compete effectively, miners use specialized hardware called application-specific integrated circuits, or ASICs. These machines are purpose-built to solve Bitcoin's cryptographic puzzles far more efficiently than general-purpose computers. The more powerful your ASIC, the more hashes per second it can perform. This hash rate directly increases your chances of solving a block and earning Bitcoins. This intense competition drives the demand for electricity. Electricity costs are the single largest operational expense for any Bitcoin miner. In India, tariffs vary widely by state and consumer type. Industrial rates can range from 5 to 10 rupees per unit, significantly impacting profitability. To give you perspective, a modern ASIC miner can consume between 3,000 to 5,000 watts. Running just one of these machines 24/7 could add thousands of rupees to your monthly electricity bill. Multiple machines escalate costs quickly. Beyond electricity, the initial investment for ASICs is substantial. A top-tier ASIC can cost anywhere from 2 lakh to 10 lakh rupees, depending on its model and availability. Import duties can further increase this price in India. Cooling is another major challenge. ASICs generate enormous amounts of heat, requiring sophisticated ventilation systems or even liquid cooling. Without proper cooling, hardware performance degrades and lifespan shortens. The profitability of mining isn't just about electricity and hardware. It also depends on the Bitcoin price, network difficulty, and the block reward. These factors fluctuate constantly, making projections complex. Network difficulty adjusts automatically every 2 weeks, depending on the total computational power on the network. As more miners join, difficulty increases, making it harder for individual miners to find blocks. India's hot climate presents additional cooling hurdles for miners compared to colder regions. High ambient temperatures mean even more energy must be spent on cooling, further eroding profit margins. Globally, Bitcoin mining's carbon footprint is a major concern. It's estimated to emit millions of tons of CO2 annually. This environmental impact sparks debates about sustainable crypto practices. In India, the government's stance on cryptocurrency has been evolving. While there isn't an outright ban on mining, regulatory clarity remains a challenge. The RBI has expressed concerns about financial stability. Despite the lack of clear regulation, some large-scale mining operations have reportedly emerged in India, often utilizing renewable energy sources. This approach seeks to mitigate environmental concerns and reduce costs. For individual Indian miners, the high upfront costs and fluctuating profits make home mining largely unfeasible. The noise and heat generated by ASICs also make them unsuitable for residential environments. Cloud mining services offer an alternative, allowing individuals to rent computational power. However, these often come with their own set of risks, including scams and opaque fee structures. The Indian government has hinted at regulating cryptocurrencies, potentially categorizing them as assets. Such a framework could provide much-needed clarity for miners regarding taxation and legal compliance. Current tax laws require miners to pay income tax on their profits. Additionally, the 30% tax on crypto gains along with a 1% TDS applies to any sale of mined bitcoins, further impacting net earnings. Some argue that India's vast potential for renewable energy, especially solar, could make it a hub for green Bitcoin mining. Utilizing excess clean energy could turn a challenge into an opportunity. However, integrating large-scale mining into the national grid without affecting domestic power supply remains a complex logistical challenge. Energy security is a top priority for India. The future of mining in India hinges on balancing economic opportunity with environmental responsibility and energy security. Striking this balance is crucial for sustainable growth. One significant risk for miners is Bitcoin's price volatility. A sudden drop in value can quickly turn a profitable operation into a loss-making venture, especially with high overheads. Regulatory uncertainty in India continues to be a major roadblock. Any sudden change in government policy or a ban could render substantial investments in mining hardware worthless overnight. Hardware obsolescence is another concern. New, more efficient ASICs are constantly being developed. Today's profitable miner could be outdated and inefficient within a couple of years. Expert opinions vary on the long-term viability of small-scale mining. Most financial analysts agree that large institutional operations with access to cheap energy will dominate the industry. The centralization of mining power, where a few large pools control a significant portion of the network's hash rate, also raises concerns. This could potentially undermine Bitcoin's decentralized ethos. Predictions for Bitcoin's future price often influence mining decisions. Many believe Bitcoin will continue to appreciate, making mining a long-term profitable venture despite current challenges.
However, others warn of market saturation and decreasing margins, suggesting that only the most efficient operations will survive. The mining difficulty is a key indicator to watch. The Bitcoin halving event, occurring roughly every 4 years, reduces the block reward by half. The next halving is expected around 2024, which will severely impact miner profitability if Bitcoin's price doesn't rise significantly. Future energy solutions like modular nuclear reactors or enhanced geothermal power could revolutionize mining globally. These sustainable options promise consistent, low-cost electricity. Could India leverage its vast solar potential to become a leader in green Bitcoin mining? This requires significant infrastructure investment and a clear, supported regulatory framework from the government. The responsible disposal of electronic waste, or e-waste, from obsolete ASICs is also a growing concern. As hardware rapidly evolves, older machines contribute to a substantial waste problem. Globally, competition is fierce, with mining operations scaling up in countries with favorable energy costs and regulations. Indian miners face this global challenge head-on. The transition to more energy-efficient consensus mechanisms in other cryptocurrencies, like Ethereum's shift to proof-of-stake, suggests a potential future direction. However, Bitcoin remains committed to proof-of-work. For the average Indian investor, direct Bitcoin mining is likely not a viable option, due to high costs, technical complexities, and regulatory uncertainty. The capital and operational expenses are simply too high. If you're interested in Bitcoin, consider safer and more accessible methods. You can buy Bitcoin directly through regulated Indian exchanges, like CoinDCX or WazirX. Start with small amounts that you are comfortable with. Always do your own research and understand the risks before investing in any cryptocurrency. The market is volatile and prices can change rapidly. Invest wisely and responsibly. We hope this deep dive into Bitcoin mining has demystified this complex topic for you. If you found this video informative, please hit the like button and share it with your friends. Don't forget to subscribe for more insights.